It's
hold on,
not.
Jenny.
And also,
Jenny,
Josh,
hang on. Do me a favor,
okay.
Jenny, sorry. I'll let you get in on the conversation in a second. I do want to bring in our next guest, though, as I tell you about Credit Suisse, and they're pulling down their rating, albeit slightly, on tech and software. And Krinsky talking about the risk being lower for NASDAQ. Our next guest is adding to his tech holdings. Jethro Townsend, you know him. He's been on our show multiple times. Jethro, it's good to see you. He's the founder and CIO of Addend Capital Management, and one of the stocks you're adding to plays into the conversation. It's CrowdStrike, which, oh, by the way, and thanks to one of our viewers for sending this in, is at 45 price to sales is at 45. So I hope you've heard our conversation to this point. Jethro, it is one of the stocks that you're adding to. Why don't you tell us why and how you view everything right now in tech through the prism in which you're viewing it?
Yeah, thanks, Scott. It's great to be back. In technology, I mean, it's had a pretty incredible run, and we've seen multiple expansion across the space. I mean, it's instructive to kind of look underneath the hood to kind of see what these drivers are. And clearly, there is some reason for that. I mean, if you look at tech, there's been positive earnings revisions, particularly in the mega cap growth names. This has been exacerbated by central bank liquidity that's pushed investment dollars, obviously, towards higher risk assets, right? And so we've got this chasm between Wall Street and Main Street. Obviously, that's existed for some time, just given rates near zero and the Fed stepping in and making asset purchases. We also look at kind of like what's happening, broadly in the system. Like we don't see stress in the system, just given where credit spreads are. CDS default credit swap spreads are still tight, so we don't see like macro risk. But just getting back into tech in particular, to some of the points. I mean, we've had a huge spike up from the bottom. Tech now, if you look at the S&P 500 information technology space, is trading at about 28 times forward earnings versus what we see as a long-term average of about 20 times earnings. So that's a negative 28% delta. I'm not being a harbinger of doom as far as the space is concerned, but to the extent that one sort of believes in reversion to the mean, it kind of puts things into perspective. I don't think we're going to realize that magnitude of downside in the very near term, just given some of the aforementioned reasons that I mentioned, unless there's some exogenous event. But in terms of like kind of where we are and where we've been positioning, we've been buying, but we've been selectively buying. We've actually been taking a more balanced approach within tech, just given some of the things that I mentioned, with some high growth exposure as well as some valuation supported names. We've actually reduced our overall net exposure, although we, again, as you mentioned, and thanks to Josh for making the point, we've been constructive on a CrowdStrike, but buying the dips. But we've also been keen on a couple of value names that we can talk about later, such as
Broadcom, Dell Technologies. Forgive me for interrupting you, Jethro, but it's Broadcom, Dell Technologies are two other names that you're adding to.
Yeah, we like Broadcom. I mean, Broadcom, it's a well-managed company by Hot Tan. It's a diversified semiconductor company that's been shedding some of their non-strategic businesses. And they've been focusing on areas where they're number one or number two, particularly cloud, data center networking, 5G wireless, where Apple is their largest customer, storage, and mission-critical software. They've also made a purchase in Symantec on the cybersecurity side, and we can talk about CrowdStrike later. They've been executing pretty well despite very tough conditions, right? I mean, they've had a beat and raise quarter, driven by re-acceleration in their semiconductors business, growth in networking from telecom and the cloud space. And again, as we've talked about, the wireless side is seeing some inflection point, just given the iPhone 5G production ramp that's about to happen. And there's also increasing, content of chip content.
Let's do this. Let's do this. I think you were just supposed to join us for a few minutes to talk about the current thing we're doing. Why don't you stick around with us till the end of the show? I want to take a quick break. We'll come back. Jenny, I'm going to let you make the point you wanted to. Jethro, we'll hear from more from you. We'll hear from the gang as well when we come back about a mystery chart as well. The stock is up 35% in 6 months, and it just got a bullish call. We're going to debate that with the investment committee.